Hey guys, what's up? Stock Retail coming back to you. As you can see today, I've got just a very specific topic I'm going to cover. So in particular, if you're here for AMC, this is going to be more for you today. There is a lot of news going on, so let me just address that really quick. Various executive orders that in particular relate to Bitcoin and some other things going on. And then of course, Kitty posting last night. There is a lot to talk about. So maybe I'll even make a separate video or something. But so just to focus in, I have been seeing a mixture of genuine questions and FUD on the topic of AMC's interest payments, especially as it relates to the Q3 filings. And so I want to just go ahead and click in. I've gotten enough questions on X and here on YouTube, people asking me about this. And again, some I can tell are sort of, I don't know, shills trying to guide my voice into what they want to talk about. And then some I can tell are just apes saying, hey, your voice and some other voices aren't saying some of the same things. Can you talk to us about this? So I'm going to go ahead and click through interest. As always, you know that I'm going to, by the end of the video, kind of round out to a holistic point of view and point the way forward. We're going to have to go through some details today. So hang with me, and especially if you're just real interested to understand your AMC investment, I think it's worth going through this. So we're going to go through actually some things from the last quarterly filing. So most of these screenshots, in fact, I think all the screenshots I'm going to give you today, you could find in AMC's 10Q that was filed. You could find that on AMC's investor relations site, or you can find it on the SEC Edgar site. If you followed me for a minute, you know I'm always encouraging you, don't trust me, don't trust anyone else, go see for yourself. And you can fact check all of this and even find a whole lot more information. And so I'm just here to guide you on how I see information, and I'm just one point of view. And then also maybe I have some history at looking at documents, and so I can kind of tell you what I'm looking at and why I'm looking at it. So let's just go through some pieces of the document itself, and then like I said, by the end of this, we'll come to a rounded point of view. So you'll see, actually, if you search the word interest in the document, I think it was 157 times that this word shows up. So it is definitely a topic, no pun intended, of interest with regards to AMC. And so you can see, I'm going to show you a few things. The first of which is, if you look at cash flows, over the first 9 months of 2024, AMC spent about $8 million more on interest than the year before. And what I would actually say is that is, in a way, kind of peanuts. That is a very close number, 290 as you can see versus 298. Now, we'd love to see that number going down. I've talked a lot on my videos about AMC's debt going down and how debt payments would go down and all of that. But what happened in particular was, so if you looked at the first 6 months, it basically was down. And then for this last quarter, we're going to go through some reasons why the number was up. And what I really want to focus to on that I'll kind of tip my hand a little bit, what is sort of going to be long living in terms of our interest payments, and what was kind of an impact from the refinance and all of that, because that's where I don't see people kind of giving you the full truth. People, I've told you in recent videos, sometimes the way a shill will work is to give you partial truths so they can sort of stand behind it and say, well, I'm not lying, but they don't give you the whole picture. And so they can paint something either, on the hype side, they can paint all hype, or on the fear side, they can paint, you should be worried. And when they don't give you the whole picture, you're left having to sort of, guess at some things. So I'd rather give you the whole picture. So basically, there is a piece where refinancing, pardon the typo, that is not a decode, refinancing, caused various bookkeeping. I'm just going to call it bookkeeping. And so you can see here basically a bunch of accounting language. There was a whole table you can find that, so you had debt repurchases. I'm just hovering my arrow if you can see this. Debt repurchase transactions, debt for equity exchange transactions. So debt repurchase is you pay down your debt. Debt for equity is you trade stocks for debt. So we saw some of that. Cash and debt for equity. So there was a bunch of transactions in Q3. As you recall, it was around July that we did the huge refinance. And I have a whole video on the refinance you could go find, going through those filings. And you're going to see in a minute, when I did that video, right off the bat, I said, hey, did we just pay down $400 million of debt? File that number away in your head, because we're going to hit that quite a bit today. And so there was all these extinguishments of debt. And then look at this. So the reacquisition price of extinguished debt was determined, blah, 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 following table. So there were expenses related to this refinancing, is what I'm really getting at. And you're going to see some of those are accounting, where it's what I'm calling bookkeeping, reflecting value on the balance sheet. So sometimes you accrue expenses to basically match actions up to the balance sheet. It gets real wonky. I'm speaking accounting language here. And then there's some things that are actual expenses like cash out the door. And you've heard me talk about that a lot on this uh, channel as well, in terms of when is something a bookkeeping expense and when is something actually cash had to go out the door type of expense. So you'll note that also there's some other things from this last quarter. Note that because we had a lot of, so here's that table that we're talking about, or part one of the tables. So there's a whole lot of things going on. So here was the total principal repurchased or exchanged. So we had paid off like $300 million of debt. You can see how many shares were given for that, what was the reacquisition cost of the debt. There's gain on extinguishment. So you can see, like in this case, just what was in this table. We paid off over 300 million in debt, but only basically spent 240 million to do it. So there's a gain that's reflected. But then there also was accrued interest that was actually paid. So that's part of the cost that you'd see. So there's this $10 million. There is another table I'm not showing you that is $3 million so this is stock exchanges. There was cash paid also for interest. So what I'm getting at is you had various expenses related to all of the goings on of paying off debt, refinancing debt. Remember how we pushed a lot of debt out to 2029 and 2030? We paid some off. All of that has all kinds of accounting that has to be reflected in the books. And ultimately, you're going to get to this line where you saw in Q3, the interest expense was higher than the last few quarters before it. And so I'm just showing you some of the ins and outs of everything that goes on behind the scenes that leads to that. So here's some more. Note that there were fees and losses on the refinance itself. So you just read this line at the top. The debt repurchases and exchanges for the second lien notes were accounted for as extinguishments and resulted in a loss on extinguishment as follows. And so there's a whole bunch of accounting for that that gets you to this bottom line of a $60 million loss as well. So I'm just showing you, I'm not going to go into too much detail because it gets, I'd be a really boring video to talk about all the accounting, but there are all kinds of accounting rules that go into when we're paying down debt, whether that was with stock, whether that was with cash, whether we made a gain, how much interest did we pay, and all of that has to go into the books. And so the reason I'm just sharing that with you is you're getting videos from people just saying some end result of, oh, the interest expense was higher. And they're not necessarily giving you all the ins and outs and everything that happened. And one thing I want you to hear is some of what I'm describing would only have happened as an event. And what by that I mean it's not ongoing. So the event of refinancing all of our debt caused a whole bunch of bookkeeping. In some cases gains, in some cases losses, in some cases cash, in some cases book expenses, and that all were reflected in our Q3 results. So you can see then debt exchanges also resulted in $41 million of costs paid. So read this line. The debt exchanges for existing term loans. So this is now the term loans. A minute ago we were talking second lien notes. Now we have these term loans. So there's even different buckets of debt. And I promise you we're going to pull up here in a minute and then talk about sort of, more nuts and bolts, a little easier to digest. So the debt exchanges for existing term loans were accounted for as modifications and resulted in expense of approximately $40 million for costs paid to third parties. So there were, again, fees related, costs paid related to all of the refinance, and in some cases, in this case actually debt exchange. In other cases, it was extinguishment, paying down, all of this stuff. So there were costs in this case related to the refinance itself. And you can even see it says, see Note 1, basis of presentation for additional information related to refinancing. So again, just ask yourself, the people who have started to tell you, hey, AMC's debt payments are up, have they been telling you all of these different pieces related to the refinance, which was a kind of one-time event? My hunch is no, they're not giving you all that information. They're just giving you the fear piece and telling you kind of be afraid, be afraid. And I've told you over and over and over, question those types of voices. The flip side is true as well. If someone's only giving you, rosy pictures and never giving you the whole picture, then you just can't trust that. You need the whole. Okay, I think I was just saying you need the whole picture. Apologies. It's pretty rare for me to edit anything. In fact, I think the only times I've really edited something is when I accidentally showed too much of my personal screen at the end of this. But right there, I had jumped forward to the next slide, and I realized, kind of a mistake I'd made, and which also should tell you I do these in one take. Um, and so sometimes there's some flubs. All right, but fixed now. So just I was saying you need the whole picture, and so part of the issue then is let's look at one of the big pieces of the picture as it stands right now. And by the way, go back and look. There are two sort of 2025 outlooks videos that I made, and go back to like the first one of those. It's probably, I don't know, 3 or 4 videos ago. And then there's a cash flow video for 2025 I made as well. Those will kind of help ground you. But one of the big things in that first 2025 video that I covered was this, that, hey, there's $400 million on these exchangeable notes. You can see it's 414. And so think through, like you've seen the Adam video maybe, where he talks about, hey, at $5.66, there's maybe this conversion. And so you can just see this was in Q3's filings. And by the way, also, I said file away that $400 million number. The first refinance video I made that's clear back probably last July or August, I had said, hey, did AMC just pay down $400 million? And I still remember to this day, somebody's comment on that was, well, this didn't age well. But you see now why I said that. And so the reason I highlight that, you guys know that I care about credibility, but also you need to be following people who will actually read the filings and not just kind of give you a bunch of fluff and clickbait. And so I had seen all the way back last July in the refinance filings, or whenever we got those. You'll have to go back and find that video. Off the top of my head, I don't recall. But anyway, I'd seen this. So now look, the company issued 414.4 million aggregated principal of its exchangeable notes. So exchangeable meaning, the people who own this debt can flip these to shares. And you will see, let's just actually go ahead and go forward. This was where I had gotten all that. So at any time prior to the close of business, blah, 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 there's kind of a whole lot of legalese. But focus in down here. The exchange rate initially set, which reflects a price of $5.66 per share common stock, blah, blah, blah. So basically, once we get over $5.66, it starts to be profitable for these debt holders to flip their debt into shares. So that is why Adam kind of highlighted that number. I think it's a little more nuanced. He was speaking quickly to a journalist in the movie industry, so it's not like he was going to sit there and explain all the ins and outs of finance. And apes have kind of grabbed onto that number, but that's kind of why he talked about that. That there's a point in time where it becomes profitable for these debt holders to flip and take shares instead. And by the way, that's then part of the conversation when people tell you, does AMC have any shares left to sell? Well, these shares are spoken for. They're on these exchangeable agreements. We've got to hold them in reserve so that these debt holders can later come knocking and say, yeah, I don't want to hold my debt anymore with you, AMC. I prefer to have these shares that are now worth more. But what you need to file away, when people talk to you about interest payments, what do you think happens when $414.4 million of debt goes away that, let's go back, is being paid at these interest rates, right? So these bear an interest rate of 6% if paid in cash, 8% if paid in kind. So that's the exchangeable notes. So you will see, and that all was in the math of the share price and all of that. So you're going to see a significant amount of debt go away, almost $500 million. And you're going to see the interest payments go away with that, right? So again, I ask you, as people have talked to you about AMC's interest payments, have they been highlighting that whenever we finally have a run, whenever the business turns around, the algos decide it's time, whatever it is, and again, watch the videos I've made that show you where the business is coming from and the timing of when we're making profits. I've got to think that's coming soon, and I would certainly argue that 566 is a pretty depressed price. So I don't see it being far-fetched that we would run back to that at some point. Then almost $500 million of debt disappears, as do the interest payments with it. Are people giving you that piece of the whole picture? I kind of doubt it. All right, so then there's some language in there about accounting, and it's complicated, but the reason I highlight that is you are going to see shifts in valuation of some of our debt, and you're going to see that in our books. And when we get that, I will review it and share it with you all. And so you're going to see some kind of give and take in terms of valuation that has to be accounted for. And so then just focus in on the cash of where did we have actual cash expenses and where are we having expenses that we're booking related to interest and interest charges and stuff like that. And so it's going to be really important that we pick all that apart. And you know that I'll be here to try to help us do that. So there is some interest that is higher. Let's cover that. So you will see this was a note that they had made on some of our results. Interest expense increased $16 million to, let me find this for you. Due to increased interest expense of $18 million on the new term loans. So remember, I just talked about there's exchangeable and there's second lien and there's term loans. And what you're going to want to pick up is, so there was an increase on those, but there was actually a decrease on some interest of $8 million on the exchangeable notes. So that actually that was another increase, but then partially offset by declines in interest expenses of $9 million on the second lien notes. So you see how this kind of all sounds complicated. Here, let's just say it in sort of English. There's kind of three buckets of loans. In two of them, interest went up. In one of them, it went down. And kind of overall, that cost us some money in Q3. So I will acknowledge that. That's real. But it's not as big one as people are telling you because they didn't do the overall math. And they remember, that's why I led off this video with there are some one-time expenses as well. And so there's all these things lumped in, pardon me, that impacted our Q3 that we need to let wash out. Sorry, guys. We need to let wash out and start to see what Q4 and beyond look like. And speaking of which, let's have a conversation, again, whole picture, on what's the go-forward view. Because, I just showed you increase of 16 million. Sorry, let me go back. Increase of 18 million on the new term loans. Well, what are those term loans? So over $2 billion. Look at this. This was from this same filing as of September 30th. So that's just the end of the quarter, and that's why they're talking about that. We had an aggregate of 2.0193. So basically 2 billion, guys. 2 billion outstanding principal on our new term loans. And then notice that now we got to talk about the Fed. Have you guys been seeing lots of discussion about Fed? Remember Adam came out and talked about when rates are cut. So you might hear conversation on rate cuts, the federal interest rates. You'll hear things about like the overnight rates and the Fed funds rate and some stuff. And I'm going to show you that. And so what you need to know is we have, of all of our debt, about half of it is on these, you take the Fed rate and notice this base rate plus a margin of between 500 and 600 basis points. And then that kind of depends on kind of how our balance sheet looks, our leverage ratio. So you need to know, first off, that when we paid this higher debt, what I just showed you, we paid that higher debt in Q3. But what else happened in Q3? I'm going to talk to you in a minute about rate cuts. So before we do, let's go back a little bit. So it's in this same filing, AMC filed and put on the record that anytime there's a 100 basis point change in market interest rates, we would have, and remember, Adam tweeted about this, right? Or he posted about it. We would have increased or decreased interest expense. So if it goes up 100, if it goes down 100 basis points. And I'm going to show you all that. I'm going to unpack this in just a minute. Then on those term loans I just showed you, they would save. So this was because it was our third quarter, they're kind of talking about a 9-month period. So they would have basically 15 million during those 9 months. Well, that's 5 million a quarter, which Adam talked about. And so anytime the Fed rates go down, you'll hear how they had like a 50-point cut or a 25-point cut, right? Or they might say half a percent or a 1/4% cut. That's these basis points. So a 0.5% cut in the rate is a 50 basis point cut, or a 1/4% cut is a 25 point cut. It's just language in finance. But the point is, Anytime you get a full percent change in the rate, it saves AMC $20 million a year on these loans I just talked to you about, that $2 billion. So again, people told you interest rates are higher for AMC, we're paying more money, but that was Q3. What has happened since Q3? Well, I just told you if the rate goes down 100 basis points, it saves us $5 million a quarter. Well, what has happened since Q3? Let's go through that. On September 18th, which was the very end of our Q3, there was a 50-point basis cut. The Fed started cutting rates in September. Now, that's so late that that didn't really help us, right? Because actually, sorry, I guess I missed some animation here. The refinance happened, you can kind of see at the bottom, it's pretty much aligned to July. So the refinance happened in July, so we're paying that higher interest rate. Look at where the Fed funds rate was. This is directly from the Fed's website. So we were at the highest we've been in many years when we had to do that refinance, and it was the right thing to do. I'm pleased that Adam did it. I know why he did it. I know why he did it at that time, and I fully support it. But it was when Fed rates were high, right? So for that quarter, this is Q3. Q3, we paid a higher interest rate, but did anybody bother to explain to you why? Or did they just say, sky is falling, AMC's interest costs are up, right? So this is where I want you to keep questioning the voices you're hearing who don't give you context. They only give you fear. If they're giving you fear with no context, alarm bell, alarm bell, alarm bell, right? All right, but let's keep going. So September 18th, there was the 50-point cut. Well, that's not really in time to affect our Q3 much, is it? Because that's 12 days before the books close. So I'm showing you then our quarter end, but then we had more. So on November 7th, we had another 25-point cut by the Fed. And then again on December 18th, we cut another. So there's your 100 basis points, right? 50 plus 25 plus 25. So now you could expect in a quarter where you have a full quarter at that rate, right? So the rate has dropped all the way down here now to 4.4 something. I think it's up here. Here you go, 4.48. Now that we're these 100 points down, AMC's interest cost went down $5 million just on the rate cuts. And that's to say nothing of, let's go back, whenever we drop the $400 million. And I'm not even done. There was more debt that was paid off. And again, did the people who spread the fear to you cover all of this information? And if they didn't, and they're only spreading fear to you, please question them. I said this for years now, trying to show you guys how to spot what's being done to you. Okay, so 100 basis point cut. So in a full quarter, let's say I drew a straight line from the end of December where the rates were. If I drew a straight line over to the right, you would know that versus Q3 that everybody's talking about, because that's the last filing we have, you need to already, in your mind, factor in $5 million of savings. It's going to be $5 million less. Now, what I want to show you then is for Q4, notice that one of these cuts was in November, one of these cuts was in December, so you can't bank on that whole $5 million of savings in Q4. You're not going to get a full $5 million less. You're going to get something less because some of the cuts were before the quarter even started, and then some were about halfway in the quarter, and some were right at the end of the quarter. So we will have something less. And on top of that, so I just told you, let's cover this, and then I've got one more thing on Q4 and how it'll be lower than Q3. So rate cuts, I mentioned the 100 basis point cut. You can go back and find Adam's tweets on this too. Partially impacting Q4, as I just said. It will fully impact Q1, as I just said. And then what about future rate cuts? So are the voices of fear telling you about those? Well, this is just today from an account that I happen to follow. There's someone who works for them, actually, who in 2021 was kind of riding with us. And I just sort of stayed connected to them. They went a little bit quiet on AMC, but I tell you what, it's fine with me because they're not one who ever flipped on us and betrayed us. And I think they... let's just say it's someone who I respect their knowledge on kind of macroeconomics, and they and I talk from time to time. So kind of like this account, and they shared today that Trump says, that he's going to demand the Fed will lower interest rates. Well, let's not get into politics. That's not what my channel's for. You can love or hate the guy. But let's just acknowledge this is the conversation. So the conversation is Trump is going to put a lot of pressure on the Fed to reduce interest rates. Whether the Fed will listen to him or not, you could have a whole debate about as well. I'm just letting you know the environment that the Fed's been cutting rates, and now there is at least a demand from the White House of further rate cuts. If that happens, remember again, you'd need to book savings for AMC's interest payments. So, since the end of the third quarter ended all the way back in September. I covered in those 2025 videos, that's why I pointed the way back to those, that we already in Q4 paid off $45 million of debt. So that's about $1 million of savings a quarter as well. So take these voices of fear, take the numbers that they give you, and start minusing out all the rate cuts, and now minus out that we have this $45 million paid off. Remember that Goldman Sachs just paid us $184 million in cash, so now we need to watch, is AMC just going to use that in the war chest and just have some cash reserves? Is that part of our go plan? How much of that gets spent? But now this third little point here on the second bullet, how much of that gets used for debt paydown? Well, that would further reduce our interest payments. So you're seeing all kinds of ways our interest payments are about to go down. And I hope that you just continue to say, I need the whole picture, not just fear. So we paid off $45 million. That already happened. Bank it. It literally happened. AMC put out the announcements. We got that information. We brought in this cash, so I'm just pure speculation. I don't have any information. I'm just saying, could we pay down more debt? We have the $414 million convertible exchangeable notes that will wipe out debt and the debt payment on them. And then I have said, so look at those other videos. I've shown you how the box office is improving and how we're about to have significantly improved cash flows. I've kind of pointed the way from Captain America and Paddington. They both come out February 14th. Forward from there. So Q1, I've just said, hey guys, full acknowledgement, we're going to have more cash burn overall on the quarter. But remember, cash flows are real time. So kind of from when these bigger movies come out and forward, it starts to get better. And then Q2, I've said, is very big. I believe significant profits in Q2, maybe break even or small profits in Q3, and then busting the doors open, huge profits in Q4. So let's see how that plays out and if I'm right about that. And so, how I always say, just say it out loud. So debt is lower already than Q3. The rates are lower already than Q3. More movies are coming, so our cash flows will start to support paying down debt. Popcorn's been growing, so is candy. Again, kind of a cash flow discussion. And shoot, sorry, I got a typo here. But, I don't know. For me, I just kind of stay calm, right? It's like eat, get rest, stay strong. Don't worry about it. And I like the stock. And I bet you thought I was going to say something else, but I couldn't resist. So you know what I believe. We will win. Let's go.